If you rely on Social Security, SSI, or SSDI, the way you receive your money is changing right now, and a simple mistake could lead to your benefits being locked or frozen indefinitely. Starting in 2026, the Social Security Administration has moved into a high-security, digital-only era. New banking regulations and anti-fraud protocols mean that if your direct deposit information isn't perfectly updated, or if your bank rejects a transfer due to new verification rules, the SSA won't just mail you a paper check anymore. Instead, they may freeze your payments until you prove your identity in person or through the new enhanced My Social Security portal. What you need to know immediately: the phone call ban. Banks are no longer allowed to change your direct deposit info over the phone. You must use the official portal or visit an office. The rejected deposit trap. New rules mean if a deposit fails, the funds are held by the Treasury, not automatically rerouted. Identity verification. If you haven't set up two-factor authentication on your account, you are at the highest risk for a payment hold. We're breaking down the exact steps you need to take to freeze-proof your bank account and ensure your 2.8% COLA increase actually hits your pocket. Don't let your hard-earned benefits get stuck in limbo. If you found this warning helpful, please hit that like button to help us alert more seniors and beneficiaries across the country. Now that we have established the high stakes and the immediate risks facing your monthly benefits, we need to dive deep into why the Social Security Administration is making these massive shifts in 2026. This isn't just about a minor paperwork update or a routine change in the digital interface. It represents a fundamental shift in how the federal government interacts with your bank account. To understand the urgency, you have to look at the landscape of financial fraud that has exploded over the last few years. The SSA has reported that billions of dollars are targeted by sophisticated scammers who specialize in diverting direct deposits. Because of this, the new mandates for 2026 are designed to act as a digital fortress around your money. But like any fortress, if you don't have the right key, or if you are standing on the wrong side of the gate when it closes, you are going to find yourself locked out of your own livelihood. It is important to realize that the SSA is no longer operating with the leniency of the past. For decades, if there was a problem with a direct deposit, the system would often default to a backup method, such as a paper check sent to the address on file. However, as of this year, the push toward a paperless treasury is nearly absolute. The infrastructure for printing and mailing millions of checks is being phased out in favor of the more cost-effective and theoretically more secure digital transfer. But the freeze that officials are warning about happens at the intersection of your private bank's new security protocols and the SSA's updated reporting software. If your bank sees a deposit coming in and notices even a slight discrepancy in the naming convention, perhaps you used a middle initial on your bank account, but your full middle name is on your Social Security card, the new 2026 AI-driven verification systems might flag that as a high-risk transaction. In the past, a human might have overlooked this, or a bank manager might have manually approved it, but the new automated systems are programmed to fail safe, which means they stop the money first and ask questions later. Imagine waking up on the 3rd of the month, or whenever your specific payment cycle falls, and checking your banking app only to see a balance of 0. You call the bank, and they tell you they saw an incoming transfer but had to reject it because it didn't meet the new federal Know Your Customer or KYC standards that were bolstered this year. Then you call the Social Security Administration, and because millions of other people are likely dealing with similar technical glitches, the hold times are hours long. Once you finally get through, the agent informs you that because the payment was rejected, your account is now in a suspended status for your own protection. This is the nightmare scenario that the 2026 direct deposit rules have created. The officials aren't necessarily trying to be difficult, but they are prioritizing the security of the system over the convenience of the individual, and it is up to you to bridge that gap by ensuring your data is perfectly synchronized across all platforms. The shift toward the enhanced My Social Security portal is another pillar of this new regulation that caught many by surprise. In early 2026, the SSA finished its transition away from traditional passwords in favor of biometric and physical security keys. If you haven't logged in recently to verify your identity through these new methods, your direct deposit instruction might be considered unverified. The government is essentially saying that if they haven't seen digital life from you in a certain amount of time, they cannot be sure that the bank account on file still belongs to a living, breathing beneficiary who is in control of their own finances. This is why we are seeing so many reports of people receiving letters that look like junk mail, but are actually critical warnings that their benefits will be paused unless they re-authenticate their banking details. Many people throw these letters away thinking they are just another scam, which is the ultimate irony. By ignoring the warning about scams, they fall victim to a system designed to protect them from those very scams. We also have to talk about the role of the banks themselves in this 2026 rollout. Private financial institutions are now under immense pressure from the Treasury Department to report any irregular account activity. Under the new rules, if you suddenly change your direct deposit from a traditional brick-and-mortar bank to a neobank or a digital-only banking app, it triggers a mandatory 30-day verification hold. During this time, the SSA will hold your funds in a non-interest-bearing Treasury account while they verify that you were the one who initiated the change. They are trying to prevent account takeovers where a hacker gets into your portal and swaps your bank info for theirs. While this is a great security feature, it's a disaster for someone who just wanted to switch to a bank with better features or lower fees and didn't realize they were essentially freezing their own income for a month. This is why officials are begging people not to make any changes to their banking information during the peak of the 2026 transition period unless absolutely necessary. Furthermore, there is the issue of joint account vulnerability. For years, many seniors have shared bank accounts with adult children or other family members to help manage their finances. The 2026 rules have tightened the name match requirements significantly. If the primary name on the Social Security payment does not match the primary name on the bank account, the bank is now legally obligated to flag that deposit for manual review. In many cases, this leads to an automatic rejection. The government is pushing for every beneficiary to have an account where they are the primary owner, but the transition hasn't been smooth. Many people are finding that accounts they have used for 20 years without a problem are suddenly being rejected because the bank's internal software was updated to comply with the 2026 Direct Deposit Integrity Act. This is a massive headache for families who have structured their lives around these joint accounts, and it requires immediate action to prevent a total loss of access to funds. Let's discuss the Direct Express card as well, because it's not a safe haven from these changes. Even if you don't use a traditional bank and instead rely on the government-issued debit card, you are still subject to the new 2026 identity refresh. The company that manages these cards has implemented new usage patterns monitoring. If your card hasn't been used in a way that matches your historical data, or if you try to use it in a new geographic location without notifying them, the card can be instantly locked. Because this is tied to the 2026 direct deposit rules, unlocking that card isn't as simple as a quick phone call. You often have to provide digital copies of your ID and a live selfie through an app to prove you are who you say you are. For many older Americans who aren't tech-savvy, this creates a technological barrier to their own money. The frustration is palpable, and the SSA offices are seeing record-high foot traffic from people who are simply trying to get their cards turned back on so they can buy groceries or pay rent. Another layer of this 2026 crisis involves the data matching programs between the SSA and the Internal Revenue Service. This year, the two agencies have integrated their systems more closely than ever before. If the address or the banking information you provided on your last tax return doesn't perfectly align with what the SSA has on file, the system triggers a conflict flag. These flags are the primary cause of the banking freezes we are seeing this month. The logic behind it is to prevent identity theft, but the execution has been broad and unforgiving. It's a classic case of the right hand not knowing what the left hand is doing, but the result for the citizen is a frozen bank account. You have to be proactive in ensuring that every government agency you deal with has the exact same set of data. Even a typo like street versus saint can sometimes be enough to cause a mismatch in the most sensitive automated systems. What makes this situation particularly urgent is the timing. We are currently in a period of economic fluctuation where every dollar counts. With the 2026 COLA adjustments and the changes in Medicare Part B premiums being deducted directly from checks, the math is already complicated for most households. When you add a banking freeze on top of that, it creates a domino effect. If your Social Security payment is frozen, your Medicare premium might not get paid on time, which could lead to a lapse in coverage or a penalty later on. Your automated bill payments for utilities or your mortgage might bounce, leading to late fees and hits to your credit score. The direct deposit freeze is not just a localized problem. It is a financial emergency that can derail your entire life in a matter of days. That is why the SSA officials are sounding the alarm now. They know the system is brittle, and they know that the burden of proof is now on the beneficiary, not the government. As we move forward into the middle of 2026, the SSA is expected to roll out even more fraud prevention updates that will likely involve mandatory video calls for certain high-risk account changes. This is part of a broader trend towards zero-trust architecture in federal payments. For you, the viewer, this means the days of set it and forget it regarding your Social Security benefits are over. You need to be an active manager of your digital financial identity. This involves checking your My Social Security account at least once a month to ensure there are no messages or alerts that you might have missed. It means staying in constant communication with your bank to ensure they have your current beneficiary verification letter on file. And most importantly, it means being extremely cautious about any emails or texts you receive. Real SSA officials will never ask for your bank password, but they will expect you to know how to navigate their official secure systems. The complexity of these 2026 rules also extends to those receiving survivor benefits or disability. In these cases, the representative payee system is under even tighter scrutiny. If you are a payee for someone else, you must ensure that the bank account is titled correctly according to the 2026 fiduciary standards. The account title must show the beneficiary's ownership, with you only as the person with signing authority. If it is titled as a simple joint account, the SSA has the right, and in 2026, the mandate, to suspend payments until the account is retitled. This has caused a massive wave of account freezes for parents of disabled children and those caring for elderly parents. The transition period for these title changes is closing, and if you haven't fixed your account structure yet, you are essentially living on borrowed time before the system flags you. In closing this segment of our deep dive, it is vital to remember that knowledge is your only real defense. The system is designed to be rigid to prevent theft, but that same rigidity can crush the very people it's meant to serve if they aren't prepared. You have to be your own advocate. Don't wait for a letter to arrive in the mail, because by then, the freeze might already be in effect. Take the time this week to log into your portal, call your bank, and verify that every single piece of information is identical across the board. The 2026 direct deposit banking rules are here to stay, and while they may be a headache, they are the new reality of the financial world. We are going to keep monitoring the situation and bringing you the latest updates from SSA insiders, but the first step starts with you. Make sure your account is compliant, make sure your identity is verified, and most importantly, stay informed. If you found this breakdown of the 2026 banking rules helpful and want to help us get this warning out to more people, please make sure to hit that like button right now.